Hello traders, welcome back. In the previous lecture, I have discussed about the symmetrical triangle pattern on a price action chart. And from this lecture 1 to the next couple of lectures, we will learn another chart pattern, that is the channel trading. So in this lecture today, I will be talking to you about the formation of a channel trading. Channel are the important concept used by most trader and investor. It provides an excellent way to identify potential entry and exit points. It also useful in identifying area of potential breakout. So let's start about the channel trading. What is channel trading? Channel occurs when the price of an asset is moving between two parallel trend lines. The upper trend line connects the swing high, while the lower trend line connects the swing low. Channel trading involves using technical indicators which highlight area of support and resistance. In channel trading, when the price of an asset approaches the lower trend line, it may be good time to buy as the price near to bottom of a channel. Conversely, when the price approaches the upper trend line, it may be good time to sell as the price is near the top of a channel. How to trade using channel? There are two ways to trade using channel: trading the trend or breakout trading. Trading the trend will involve taking a position consistent with the overall direction of the trend, such as going long is an ascending channel and going short is a descending channel. On the another way, breakout trading will mean that you take a position on any price action which break through the upper or lower band of the channel. For example, you will take a long position if the price of an asset break above the upper band of a channel. On the other hand, you will take a short position if the price fall below the lower band. The channel pattern is one of the best continuation pattern that is useful for any kind of market condition. The channel pattern consists of two trend lines, upper and lower, and the channel between those lines. It is necessary for the trend lines to be parallel to each other. The upper trend line represents the higher high, while the lower trend line represents the lower low. The channel formation is useful to look for breakout, placing stop loss, and taking profit strategy depending upon the overall trading strategy of an individual trader. Types of trading channel. There are three types of trading channel: ascending channel, descending channel, sideways channel. We will discuss those type of channel trading in next lecture. So not more today. Have a nice day. Goodbye.